Veritaseum is an ICO and software startup. Circa 2013, incorporated 2014. We had a token sale in 2000 last year, April, May 2017. It is a true utility token, but it's a true utility token that actually has significant value. We launched it at $1 in April and May, and of course it has a lot of volatility attached to and in correlation with Bitcoin and ETH. It's trading at about $39 or so. What makes it special is that it is prepaid fees for products and services. Anybody who's heard of me, if you Google my name, I got my start in entrepreneurial investing. I predicted the fall of Bear Stearns. I put out a 35-page report in January 2008, saying Bear Stearns was toast. We did Lehman Brothers, Countrywide, Washington Mutual, the European sovereign debt crisis, naming Ireland, Portugal, Spain, and Italian banks, the real estate crash, both housing and commercial, etc. So I have a pretty strong track record, both of global macro analysis and fundamental valuation. In 2013, I decided to look into Bitcoin, blockchain, and my jaw dropped. I saw digital money that was able to circumvent both central banks and money center banks, scriptable, which was very important, and smart contracts. So I dropped my advisory business, which was Boom Bust Blog, and went full, head first into digital assets. Unlike most at that time, though, I didn't think in terms of money remittances and coins going up and down. My focus was always on smart contracts, and that was way back in 2013. We filed the first patent applications for the capital markets use of smart contracts that we know of in 2014, globally in all the major financial centers. And I'm here to go over quickly our smart contracts, our peer-to-peer capital markets application suite. Basically, think of Microsoft Office for peer-to-peer capital markets. So since I don't have a lot of time, the product is called Veritaseum. You could go to our website, Veritaseum.com. There's a video that explains everything. The first link brings you straight to the application suite. To begin with, there's the Veda, a Veritaseum, autonomous, distributed interactive research. I have a research staff of 4, and all they do, and this is the same individuals who help with Bear Stearns, Lehman, etc. All they do is digital asset research, both native organic digital assets and the Veritasation, or some may say tokenization, or some in Washington, D.C. may say securitization of real-world assets, okay? The Veda basically takes our research, creates a portfolio from the research, and if you take a look at the Veda, if you go to dapp.veritaseum.com, go to the menu, click research, you can see examples of it. 60, 50, 60, 65, 70-page research reports, very well done. Not only is it best of breed in the industry, I challenge you to find any other research report that comes from anywhere in the sell side to challenge it. Okay, so go to Morgan Stanley, go to Goldman Sachs, and take a look at their Facebook and their Facebook and Google research and compare it to our digital asset research. Top notch. Now, from that research, it creates a model portfolio with valuation bands, and then the system, using smart contracts, goes out and purchases those tokens or those assets, and then allows you to go in behind it, take your capital, and replicate that portfolio, based upon several rules. This is basically a smart contract-driven private equity or venture capital firm. The difference is flat 5% fee, no performance fee, no incentive fee, etc. Upon strong performance, it is up to 95% cheaper over a period of several years. Okay, that's one application. We have several, but one is very interesting, and that's VE tokenization, where we tokenize real-world assets. We actually do it. All the applications I've discussed, all the services I've discussed are up and running in the wild. We call it beta because we have some jurisdictional challenges, as you may assume, but we have filed for a broker-dealer, a FINRA licensed broker-dealer in the US. I hired a co-CEO who will be here in a few hours. His name is Jeff Tabak from Miller Tabak. Anybody in the Wall Street industry over 45 years in the New York City area knows who Miller Tabak is. 42 years in the business, 37 years running his own firm. He created program trading before there were computers using actual index cards. He came on board with about $65 billion of assets under management in his Rolodex, not personally, okay? We are domiciled now in Africa, Lagos, Nigeria, Uganda, Bermuda, and we're filing for a full license to do all investment banking brokerage services in Bermuda as well. So, I hear stable coins are a topic that's being discussed. We have a natural stable coin, tokenized gold, okay, but we went a very different route. We're not doing it as a currency, we're doing it as title to ownership of gold. So here I have various examples of what can be tokenized. And again, this is not a concept. You go to our website, right? You click the Veda, you go to VE Assets, you can purchase tokens right now. If you use F, the whole purchase round trip, unless there's a problem with AML KYC, it's done in about 3 to 8 minutes. Okay, and I see some members of the team are walking in. I want to introduce them. We discussed Jeff. I'll get to the others in a minute. So you go in, you could buy tokenized grams of gold, right, using F between 3 and 8 minutes. We have our own home-built AML KYC system. It was built specifically for blockchain use. It takes your identity, it binds it to a public address, and it's fully compliant in Bermuda, in many of the larger nations in the African continent, and the US. And we're looking to get it certified in Asia as well. Okay, we have tokenized maple leaves in 1/10 ounce, the stable, tokenized gold, and we have the big daddies, actual kilograms of gold, right? 0.999 fine gold is held in vaults, LBMA approved vaults, secured by Brinks, insured by, who's it insured by? Lloyd's of London. Okay, is everybody's familiar with gold? You ever held a key in your hand before? Who has it? Raise your hand. All I ask of you is to give it back and don't drop it. Fair enough? Okay. Okay, so, that's a kilogram. It's about 40,000 right now, US dollars. Okay, why did we choose gold? Okay, because, and I'm not a gold bug at all, okay, gold has a stable value over the last 2,000 to 5,000 years. Okay, if you want to create an actual stable coin, you should never use a US dollar. Okay, US residents may think of the US dollar as stable, but if you travel the world, it's actually very, very volatile. Ask people who deal in the African Naira, the Nigerian Naira, how stable it is, or the Chinese Yuan, or even the Euro. Okay, you're talking up to 45, 50% volatility, massive standard deviation fluctuation. Gold is stable. And if you have the correct financial engineering chops, okay, gold is also legal without having to go through a lot of the hoops and changes that you have to go through if you tokenize another asset. Now, once tokenized, this gold is stable. What happens, and this runs through the ERC20 blockchain. So let's suppose Bitcoin and Ethereum do another drop, 60% drop, 80% drop, okay? This tokenized gold is running on the ERC20 blockchain. And suppose somebody who is bad at math decides to sell it for 50% off like everything else. I see you're thinking very hard, right? Your brain, your gears are churning. You're saying, wow, he might be onto something. What happens if you take a kilogram of gold, right? You pay $40,000 for it, and then someone else sells it for $20,000. What would you do? As the intelligent man that you are.
Just keep this one.
Really? Okay. You keep it? What would you do? What would you do? Okay, he said he reselled for 40 grand. The primary impetus behind stability in this token is that everything is redeemable upon demand, 100%. All we do is hold the gold for you. So, you send the gold back to us, you pass AML KYC. If it's the same address that bought it, you don't have to go through AML KYC. Give us the address, we ship the key to you. Or we ship the ounce to you, or we ship the individual grams to you. Now you have the physical gold in your possession, right? And if someone's foolish enough to sell it to you for 50 cents on a dollar, you should be redeeming all day. If I were you, I'd buy and redeem all day. Now, a guaranteed 50% profit is going to drive the price of the token which way? Can't hear you. Come on, hurry up. Up, okay. Right? The token goes up too far, the guaranteed 50% loss, that drives the price of the token where? Down. Market arbitrage, natural human greed, keeps it stable right around the spot price of gold, which is actually very stable amongst all fiat currencies. The only real variation that anybody can justify is the expense of the arbitrage, which is minimal. A true stable token. Now, to go even further, since it rides on the ERC20 blockchain, you can take advantage of what special attributes? Help me out, come on. What? Smart contracts, good guess. So, we take this token, AKA stable token, AKA what the US dollar was pre-Bretton Woods, AKA truly stable digital, I can't say currency because that wouldn't be, digital store of value, and we ride it through a smart contract. Now, we're working on smart contracts, and we're working on smart contracts that are A, truly smart, and B, truly contracts. So we have a team of lawyers with a team of financial engineers and analysts, and we have very smart number guys like Andrew Smith, who just walked in, who came and joined us a few months ago from Angelo Gordon, $23 billion hedge fund. Okay, we work together, lawyers, analysts, engineers. We create smart contracts that are templatable, and these smart contracts hold up in the court of law. So they template and they match exactly a written contract. They could both be registered, and these smart contracts will stand up with, due to precedents, case law, etc., in almost every state and federally in the US. In addition to that, they are smart. So they execute automatically, they administer themselves, they're unbreachable. What makes them unbreachable? Well, because now the gold is tokenized, the value is escrowed in the blockchain. So in order to breach a contract, you have to take a financial loss. 99.5% of all breaches are for financial gain. If you're guaranteed to get a financial loss, you will not breach. Now that 0.5% is for strategic reasons. That's beyond the scope of this conversation, but we have that covered as well. Okay, so the first contract we're doing is a mortgage note and a mortgage for a hard money loan to do property development in Jersey City, New Jersey. Okay, funded by gold, escrow, automatically executing. Now, if I convince all the players at the table to do business correctly, I can do a closing, a real estate closing, 45 seconds, because it's run through the smart contract. If I can't get everybody to cooperate, it'll stretch out to a couple of days. But regardless, we compress what takes oftentimes 3 months, 6 months, down to less than a day, down to less than a minute. How's that sound? Wonderful?
Yeah.
Oh, you don't sound too enthusiastic. You want to hear more? Would you like to hear more? Well, we'll also, one reason I discussed multiple offices that we have is because we are looking to take these platforms, the stable token, the gold, which also we have kilograms of silver, ounces of silver, palladium, platinum, rhodium. We're looking into Nigerian oil. We're doing business with family offices. We're creating joint ventures with family offices and large family offices, over $1 billion in Nigeria, in Ghana. And we are tokenizing or veritizing their assets. Private equity, public equity, oil and gas assets, land, potentially intellectual property. We are creating joint ventures with actual equity exchanges in a very, very large continent. I can't divulge which ones, but one has already agreed to go on, and the other one looks like they're coming on board in the next couple of weeks. Okay, in these actual exchanges, they'll be trading not just listed equities, but things such as Veritaseum gold, Veritaseum private equity, public equity. And because it's an ERC20 token, it can be extracted from the actual exchange and still traded peer-to-peer. The exchanges are so progressive, after sitting down with me and letting me berate them in the air for a while, that they're actually going to partner on the peer-to-peer exchanges as well, not just their centralized exchanges. Okay, Africa as a continent is very, very, very progressive. And right now, in countries such as Nigeria or Ghana, you have a very strong opportunity to make money. They're in a bear market. Their equities are down over 25% year to date. Their currency, such as for Nigeria, the Nigerian naira, is down over 22% from January, over 50% over the last 5 years. Their elections are coming up, and uncertainty has bred a lot of volatility. Nigeria is the largest economy in the state, in Africa. It has one of the fastest growing economies, and they have the second largest stock exchange. That's just Nigeria. Africa as a continent has 1.39 billion people in it. That means a lot. And it sits on top of the strongest, the most ubiquitous store of natural resources in the world. Now let's put this in perspective. China, when it entered into the WTO, had 1.1 billion people. Japan had about, I think, 500 million or so. I can't remember what South Korea did. But when they all entered into the WTO, the World Trade Organization, they had a strong economic boost. The economy shot up significantly, and they became players on the world stage. Why did China outshine South Korea and Japan? Because they have 1.1 billion workers, potential workers. Africa as a continent has almost 1.4 billion, and they have the natural resources that China lacked. The difference is Africa is 54 nations, China was one, South Korea was one, Japan was one. We're working exchange by exchange, country by country, SME by SME, family office by family office. We're taking the standardized gold token, right, as a common store of value. We're uniting all 54 countries in Africa. So have a Pan-African economic token. Not just Africa, Southern Central Europe, the fringes of the tiger countries in Asia, everywhere, okay? But Africa happens to be a particularly opportune time or place to come in because the value is significantly above the price that it's trading at due to the several macro factors I discussed. So here's the ask. We don't need capital, okay? Of course, you give us a deal we can't refuse, we'll take it, but we don't need capital. What we need are users of our product and brand ambassadors, okay? So if you want a true stable token, this is the way to do it, and this is far from vaporware. Everybody, I invite you all, go buy some gold right now. DAPP.Veritaseum.com. You can do it in US dollars or F. Soon we're gonna take exotic currencies, shillings, naira, pounds, everywhere else. Try our Veda investment system, and better yet, take a look at the research. Look at the Populous report, a PayPal report. Look at our macro research, where we challenged the Bank of International Settlements when they tried to talk down on cryptos without using facts. Take a look at all the research. You could go all the way back to 2007 and take a look at Bear Stearns and Lehman if you want. Okay? And I'll end it there, but any questions for me?
Yeah, that's what I was going to say. This is interactive, guys. Open it up to questions if you have any comments even.
What are your thoughts on counterparty risk, right? Because like these stable coins, right, that are collateral backed, that's effectively.
Can you speak up?
Counterparty risk, right? What are your thoughts on counterparty risk? Are the people who you're trying to get to adopt it, are they using that as a main consideration? Is there consideration for them?
Stablecoin counterparty risk really depends on how the coin's put together. I'll be frank, Tether looks like it's right for the risk, okay? The way to counter counterparty risk is A, transparency, but more important is redeemability, right? Whatever's backing the token, if it can't be redeemed on demand, then you have risk. Even if the counterparty risk wasn't there, you still have risk in terms of market risk. If I know that XYZ can't redeem a US dollar token, there's no reason why that token should not fluctuate in price. Okay, if you could redeem dollar for dollar, then you've eliminated it. And you also put a lot of counterparty risk fears and credit risk fears at bay by having redemptions. I'm not in the gold business, okay? I'm in peer-to-peer capital markets business. So I simply hold gold in vaults, okay, LBMA approved, and whenever you want the gold, all you have to do is send a token and pass it in KYC. We've already redeemed many, many ounces of gold, many, many grams of gold. And we call it a beta, but everything's up and running right now. So counterparty risk is real, but only because the tokens aren't structured properly.
You know, to your question, so I'm actually involved in something very, very similar to the gold and silver stuff. Biggest question that always comes to us from everybody is the counterparty risk of actually having the custody of the gold and silver. And will you redeem it? So redeemability is one of the biggest issues, which will help people to actually use it and continue to use it. But the next question that comes down the road is, well, what happens when a government or entity comes and seizes all that gold? What happens to the people with those tokens? And that's literally the next question. And that's something that can't be answered.
Well, you can answer it. It's easy to answer that, but
57 countries, right? You're still this patchwork of legal regulatory.
I'm sorry, say that again.
You're still a patchwork of legal regulatory frameworks that create that like mismatching adoption.
Well, I'm not going to explain how we did it, but we took a legal perspective from an engineering perspective that is pretty flexible, and right now it's in almost all the EU, in Nigeria, in Uganda, and all the US, federal, and all 50 states, the gold token is legal. We have legal opinions everywhere we go. Okay, I have 13 firms on retainer, firms, right? Some of these firms are the very, very large firms. So I'm very careful from a legal and regulatory perspective. What our strength is diversity. Okay, here we have Eleanor Reed. Eleanor is ex-McKinsey, ex-Goldman. She's also an equity analyst. We have Lorna Johnson there. Lorna Johnson is the assistant treasurer for the DNC, okay, and also a very successful entrepreneur. You have Andrew Smith. Andrew Smith does real estate acquisitions. He's a real estate expert from Andrew Gordon, $23 billion New York City fixed income hedge fund. We also have, we have Ms. Charlot, right, Marilyn Charlot. Marilyn is ex-VP of Financial Crimes at Societe Generale, right? She takes care of the KYC program in conjunction with 3 developers, 2 engineers. Okay, we also have Jeff, who I described earlier, 42 years in the business, right? He's not your typical crypto entrepreneur. He's 68 years old and has a very, very strong track record and a very strong reputation. He is old school Wall Street, right? He's come on board as co-CEO for the Veritaseum Securities BD that is being licensed. So, plus, you know, the legal work, the legal framework who's not here. And we have analysts who are not here because they're in a different country. This level of diversity allows us to come up with very, very unique ideas. So if everybody crowds in and wants to do a security token or a utility token or even defines these as something that has a security, that's the wrong way. You take a look at the problem, you analyze it, and then you custom build a solution. Tailored to the problem, not tailored to what everybody else does or what regulators say you should do, etc. You come up with a solution. If it passes regulatory muster, you have nirvana. You have gold. Did I answer the question?
Yeah.
Yes.
What do you mean about financial reporting and auditing? There's no required audit for gold dealers and vendors, but we'll put it up anyway because it is what it is. If you take a look at the actual app, it'll show you what our inventory is and what the supply is. Okay, and we increase the... how do we know that other than trusting you?
Buy it. If you get it, then you get the token and you know you received it. Redeem it at will.
How do we know that you actually have, is there any, will you have any big 4 accounting audits that you think
we will have an auditor. We will have an auditor come in. We won't have a big 4 accounting auditor. And anybody who's in the business who's tried knows that the big 4 won't touch a crypto firm. So we'll have an auditor. Again, my business is not in dealing gold. I have nothing to gain by trying to sell gold I don't have. What you see on the app right now is my capital. I've actually purchased, you know, several maybe 1,000 ounces of gold, okay? And I put it in inventory and I'm selling it out of my inventory. I'm taking the market price risk up front. Right now, as that inventory goes, when someone makes a purchase, then I buy the gold in real time. It'll be just-in-time inventory, okay? So I have no problem with the auditor, but the big 4 currently won't touch it. As a matter of fact, there's a conflict because all the big 4 auditing firms who are attached to accounting firms are also happen to be solution and software vendors for blockchain tech. Okay, so you know that conflict may sit uncomfortable with certain members of the community. I'm not going to say if I'm one of them or not, but you know that's a thought to consider. But auditing is not an issue. Okay, we just got it up. We'll have an audit whether it's quarterly, annually, and you can see what the count is. To average redemption time is from 24 hours to about, the longest time is about 5 days. 4 days. That 4 days was an order from New Zealand. Was it New Zealand? Was it farthest away we had an audit, Maryland? Australia. So, someone from Australia redeemed the token, right, passed the MLKYC, and they got it 4 days later. The vaults are located in the States. Any other questions?
Yeah, so you're assuming that people will buy your coin because it's stable and tied to gold and will kind of be Pan-African. And that's kind of where you're headed here. Now you started off by saying you also
just not that that's
services.
That's a subset of what we do.
Yeah.
So
you also said you do sort of fee for services for giving people or you allow other people to do coins based on others. I'm just wondering, you seem to be doing a lot of things.
Okay, so let me
Are
clarify.
you an investment bank, or are you
Let me clarify.
how do you define yourself?
We are peer-to-peer capital market software vendor. That's what we do. So we create software that allow you to do business directly with him without that Goldman Sachs banker. Okay, she could do business directly with her without XYZ third party, authoritative third party. That looks an awful lot like Goldman Sachs in the blockchain. The big difference is we don't have the conflict of interest. Goldman Sachs has extreme conflict often, okay? And on top of that conflict, we have a very different structure. Goldman Sachs, let's not pick on Goldman. The investment banking industry in the States and many places in Europe has structural deficiency in their business models. Up to 60% of gross revenues goes to what?
Salaries.
Compensation. Salaries, bonuses, etc. 60%. The investment banking industry is the only industry where the employees make more than the owners of the company. If you look at net to common after taxes and you compare it to gross compensation, there's a significant imbalance. So what we've done was we have created smart contracts, right, that run in the blockchain that can escrow capital and imitate and replicate most of the functions of investment banks, of mini exchanges, etc., without that 60% gross deficiency.
Correct.
Okay?
Terrific. Well, yeah. There
Okay.
are a lot of people that are trying to do various banking things on the blockchain, so you got a lot of competition. But
Well, actually,
interesting, the African
there's only-
slant is.
there's only one company in the industry to date that has a regulatory license to provide blockchain type issuance of security tokens out of 4,100 broker-dealers in the United States. And the way that they've got granted this authority is they only have the capability to utilize the blockchain in a very limited way. I mean, I can get into it, but it's very specific, and it might not be a good use of time.
So there's only one company.
Only
And
one
it's you
company.
guys?
No, we're not this company. Well, we're trying to build a peer-to-peer marketplace.
Right.
This company that has this capability, it's called Templum, and they still act as an intermediary where they issue common stock in mirror with tokens, and then they put the common stock in a trust, and then the tokens represent